Let's connect with the management of GHS Svengard then, and we are going to talk to him about the impact of GST on the company, the new manufacturing facilities that the company has on the anvil, as well as growth plans going forward. Nikhil Nanda, the MD of the company, now joins us on the show. Nikhil, hi, good morning. Thanks for giving us your time on ET now. I want to first, let's start by talking about the implications of the GST rate from 24% on, dental care to 18%, primarily, of course, for toothpaste. What kind of a decrease are you expecting in your overall tax incidence?
I feel GST is going to impact the overall FMCG market in many ways. The first and the foremost being that it opens up the whole country. Distribution has been a bigger bottleneck for most of the FMCG brands. This GST would open up that arena for a lot of more brands internationally and domestically to come up. We are already seeing there's a much greater acceptance in terms of moving our product, the own brand, which we started about 2 years back. And the prices would be going down by anywhere between 5% to 10%, depending on the SKU and the price point or the MRP the product is in. And we see this would be impacting the consumer buying pattern in a very positive way. It might take some time. I would give 6 months to a year before the full impact comes in. But I see the market really growing from here, especially in the FMCG category.
Okay, and Mr. Nanda, you spoke about these price decreases rather. Do you plan to pass this on to your customers? Right. And also, given the destocking activity, have you seen a decrease in orders from customers?
Absolutely, we plan to pass on all the benefits that's accruing to the company, to the customers. Yes, there has been some skepticism in the overall trade, because of which a lot of companies, a lot of distributors, they did not buy the product in the month of June because they wanted to be almost nil stock, if not really nil stock, almost as close as possible to the nil stock, preparing for the GST.
Okay. But, of course, coming out of the entire GST conundrum, many are expecting huge jumps in volumes as well because, as the prices decrease, even, the rural part of the population will want to move to commercially available dental care as opposed to something that they use informally. Is this something you're expecting as well?
Well, oral care has been a very low penetrated market till now in the country. And I see with GST and great awareness, both helping the market to grow. We are at about 65% market penetration in the oral care, with the average usage of toothbrush in India being as low as 8 months. So a person uses a toothbrush for 8 months against 4 months in China and 2 months in the Western world. So if we are able to move to the Western world in next 5 to 10 years, we're looking at quadrupling the market 4 times, from current 1500 crores in toothbrushes to about 6000 crores. And in case of toothpaste also, our average consumption is the lowest in the world, amongst the lowest, I would not say lowest, amongst the lowest in the world. If that also comes on the global average, we're looking at growing from 6500 crores in toothpaste to close to 15,000 crores. So cumulatively, the 8-9,000 crore oral care market could in next 5 or 10 years with GST and the awareness grow to somewhere close to 20,000 crores.
And how is your own brand Dr. Gold doing? Because we understand it contributes about 12% to your overall revenues. Is this going to increase?
Yes, our own brand is Aqua White, which we started about 2.5 years back. We are looking at doubling the sales in the current financial year with a couple of new launches which are in the pipeline.
Sales, that's interesting. How many customers do you conduct contract manufacturing for currently, and where do you plan to take this number going forward?
Okay, currently we have about 7-8 customers in total for whom we are manufacturing the oral care products. Going forward, what we're looking at is also adding a range of FMCG products in our overall portfolio, and probably have a larger footprint across the country in terms of the manufacturing setup also. Currently, we concentrated in the north with Himachal and Noida, which we plan to probably take pan-India to south and west also. So I think going forward, the two things that company is very clear about, and since we've got some surplus cash with us, which we'll use to either acquire or set up new facilities in west and south of India.
You've given very encouraging commentary actually about the new facilities that you plan to launch. I think the company is claiming that it will be able to generate 500 crore rupees from these two new manufacturing facilities. So what's making you so optimistic? Because it's quite an aggressive, revenue target that you've set out.
Well, I didn't give any revenue target, but yes, we are looking at some major growth in the next 3 to 5 years. Because fortunately the company is totally debt free now, and we've got some surplus cash with us, which we are going to utilize to one, grow our existing oral care portfolio, two, to have a larger footprint which is in south and west India, and three, we are going to add more product categories within the FMCG broadband, in terms of just moving from oral care to other products in the FMCG category.
What are the other categories that you plan to cater to in FMCG?
Well, we are talking to a couple of companies, and it could be anywhere in liquid filling, which could be shampoos, which could be hair oil, which could be more products in the similar category.
So you're confident of this 500 crore revenues from these manufacturing facilities. Let's talk about, even from this new range of FMCG products, what also kind of margins are you looking to clock in for the next year?
So, contract manufacturing generally has very fixed margins. It's primarily our own brand which we are relying on in generating larger gross contribution to the company, and it's doing well so far, and we are very confident with the GHS starting advertising on the own brand somewhere in the second half of this year. We should be able to increase our margin basis with increased sales also in the existing category.
12% on this entire, like from 12% roughly what your own brand is contributing. What will the contribution be going forward? You did mention you're going to double the revenues, but overall sales, what will the contribution be, considering that it's going to be a higher margin business compared to your contract manufacturing?
See, currently we are also growing on the contract manufacturing business along with our brand. So just defining what percentage it would be difficult at this stage, because both are growing consecutively. But I can definitely say internally we've set a target that in next 3 to 5 years we should be doing at least 50% sales from our own brand and 50% from the contract manufacturing. Not to forget that during the period we intend growing aggressively like we've been doing in the last 2 years.
Okay, 50%.
In both the categories, our own brand and contract.
Okay, and you spoke about hair oil, etc. Those some new FMCG products you're planning to launch. By when will you be able to give up some firm announcement in relation to those launches?
I think we are only beginning to scout around for one customer and 2 manufacturing locations. So it's very comfortably I can say that we are at least 1 to 1.5 years forward before these actually fructify and materialize. That's assuming that we get a ready-made facility for us to acquire. In case it's a new manufacturing setup that we need to put up, probably we're looking at 2 years from now.
Mr. Nanda, thank you for joining us. Clearly, the street likes what you are saying. The stock is now spiked up during our conversation. So thanks so much for giving the street this much clarity and, of course, giving us your future plans.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.